What's up everyone, welcome back to another video here in Thailand and Bangkok at my apartment. Now today I want to share with you some things I kind of struggled with a little bit in the past week, some psychology issue in trading. You'll get to see how that looks like, why sometimes we're tempted to take trades we should not take, how I was able to remind myself to not take the trades I was not supposed to take, and you'll see kind of how that works out. So let's dive on the chart. Alright, so here's an example on EURUSD. Now in the past few days, the past week or so, there's been many trades that I kind of was tempted to take. So a bit of background here, if we go back on a higher time frame, on a daily chart, a weekly chart here, let's do daily. We are near a resistance area. It's actually a support area that was broken in the past. Like you can see, price was here in the past in 2016. We came back in 2020, and we are now back here 2022, and we come back now to retest the zone. Now, you know I trade with zones a lot, I trade reversals a lot, and a zone like this to me says, oh, you gotta sell. Like it's a nice place to look for bearish opportunities. Move back to the downside, right? Just based on logic. So I went in the market, and this is a pair I have on my watch list because it's a pair that's major. Like it's the most traded pair ever in the Forex market. Everyone looks at it, and I just want to monitor it a little bit on my watch list here. I used to trade that pair more in the past. I trade it a lot less these days, and that's because I kind of found that the results were very inaccurate in this pair. It's the worst pair I have for my performance with the Bonjour Universal strategy that I trade. Is a pair that kind of doesn't work out well at all ever. And so I kind of stopped trading it with my strategy. Now I still trade it with some trend sometimes, but with a different strategy, not the same strategy I have with these reversals. But this past week I was scrolling through my charts, and the way I do it is I just go up, start with the first pair, then I'll scroll down, look at all the pairs, the setup happening, the zones and everything. Then I got to EURUSD and I saw this very nice setup forming here at a very nice point in the chart. This is on the 4-hour chart, the first one. And this was on the 1-hour chart, this first setup. See, we have a nice engulfing candle. Now on this chart here, it doesn't show us engulfing too much, but on my broker's chart, it did show us engulfing here. This candlestick right here. So we have a candlestick breaking outside the Bollinger Band, coming back within with this engulfing candle here below. And this is a trade where I would usually enter right here, just below the engulfing candle. Stop loss be on the high, could be somewhere over here, and reward to risk of 2-to-1. So I usually do one at 1-to-1, and one at 3-to-1, or 2-to-1 depending on the market context now. In this case, I would do 2-to-1 just to keep it simple, but it doesn't matter because the point here is this trade, I missed it, and I said, well, I want to take profit really quick. Like, that's a really good trade. We at least hit 1-to-1, and by the time I was here, I said, well, that's a good trade, right? And then I kind of went away from the chart, and then I come back to the charts where right around here, where I see price getting back to the zone. Now this trade got stopped out with some profit in it, so it could be a break even. But then we get this second trade here that just appeared on the charts. Okay, and I see this very big engulfing candle here. Now seeing, oh, this is going to be the same thing repeating from the past, same history. We have a nice sit up, price goes down. It can go in the favor. Now we go back to retest again. A good place to look, of course, for a bearish setup here. And I almost took that trade. I was so close to take it. And then I reminded myself, well, that's EURUSD. It's a pair I should not be trading at the moment because it's a pair that performs really bad with my strategy. And even then I thought, oh, I'll just take it, see how it goes. Maybe it's going to be a good trade. I can make a quick profit here. And because the zone looks good, it's a really solid zone. Then I again reminded myself that that pair wasn't supposed to trade it. And that I was better staying away from a trade. Because I never regret staying away from a trade too much. I usually regret a lot more when I go in the trade that was a bad trade. Because then it goes in my journal. Then I got to go back. I got to, of course, write down. I got to write down the reason why I was in. So it's kind of a lot tougher for me to go in a bad trade than to stay away from any kind of trade. Okay, just in terms of performance and kind of and not feeling bad about yourself. If I go in the trade here, I'll say, if I go in the trade here, right after I'll say, oh, I was stupid, I took the wrong decision, I'm dumb, it doesn't work out, and I'll have like all these bad feelings sometimes. So even though you've been trading for a long time, these feelings still come up. They still happen, okay, whenever you trade. So you just be careful of what exactly you want. Do you only feel good about staying away from a bad trade, or do you only feel bad taking a bad trade? You've got both choices here. So this trade, same thing happened. Now you'll see, if I play this over here, that price went in their favor. And that's usually when most people, when they see this, all right, they see price goes in their favor, they're very happy. They want to, if they didn't jump in yet, they might want to jump in right there in the market. They're going to say, oh, I knew this was a good setup. My rule told me not to go in. Etienne told me not to go in the market, but actually it's a good trade. I should jump in. Then they're going to look for any chance they have to jump in the market. Now, we kind of see this in the chart based on how price action looks. See how here we have price coming back. And then the beginners see, oh, price goes back to my entry. I'm going to jump in, sell, and it's going to be a good trade. Okay, so people jump in here, just around this level. Whenever price goes back to their entry, which could be over here after a big move, then the beginners want to jump in because they missed the move, they're afraid, and they go in the market right away. Now, see what happens. Okay, now they're pretty happy. It's profit in their favor, everything goes well. It's actually perfect. But look at how that trade didn't really take that long. Okay, this is like all hope for a beginner trader because you see the big move to the downside, but then price shoots back up and deletes that move in the market. Okay, so it's kind of erased. Then stopped right here. So can you see how that works out? You can either be in the market or you can be someone who kind of avoided the trade because you know it's a bad trade, then you jump back in the market later. Or a beginner who just see this big moves, say I want to be in the market. They jump in right here. Price goes in their favor. Okay, for a little bit with these kind of sticks over here. And then price goes back up. Then this makes them want to stay in the trade. But right after this is a big exhaustion candle here. It shows that the sellers kind of push, one last push before price goes back up against them. That's kind of how it works. Now, I knew for a fact that this was happening a lot on EURUSD. We have a lot of fake move on this pair, on EURUSD. We have a lot of times where the market looks very clear, things are working fine, we have nice setups, but then the setup just doesn't occur as we think it would occur. And that's something you want to be out of, because there's no point taking break-even trades. Like a break-even trade doesn't pay your bill. A break-even trade just makes you go in the market and then go out, and then you're just at the same level you were when you come in, okay? So the break-even trades, they don't lead to anything. So if you can avoid these trades, you'll reduce by a lot your risk. Because a break-even trade is no payout for you, but it's actually a lot of risk for you because you could actually lose it. Price could go to your stop loss and stop you out. Here we have a break-even trade. The first one is break-even, given the fact that price goes back to a stop loss here again. But then the second trade is not even break-even. It's probably like more loss. We didn't even cover or stop loss here in terms of profit. That would be a loss. So then you end up being more losing than winning. All of that because you saw a good trade first, a trade that you wanted to go in, you skip it, you see a second opportunity, then you want to jump in, and then you go out with more losses because of that. Okay, so keep that in mind. It's not something where we kind of should be in the market at this point, something that if it doesn't respect your plan, if we know our data, we should be out in the market. And I had the chance to almost go in the market. I didn't do it, and I'm pretty happy about myself now. And we actually had another example right here. This is today. Same principle. Okay, so price gives us this, again, another push back to the zone, which is a very high probability zone because we've been there many times in the past. But EURUSD is a pair that has very low reliability because we often have these, we kind of have this manipulation. We have a lot of players in the market. We have beginners, we have intermediate traders, we have pro traders. Everyone's trading it. So the moves are not that clear, okay, compared to other pairs in the Forex market or like other cryptos perhaps. So see this, same setup. Nice push here outside the Bollinger Band, engulfing candle, go back within the bands. And then we will enter just here below the low. That will be your setup here. Enter below the low, put a stop loss beyond the high. And then I saw this setup this morning. I'm like, oh, that's a good setup. That's perfect. Okay, I should maybe look at it. I should maybe enter it. Then I saw that's EURUSD. I'm gonna escape it, and that's all because I have EURUSD on my watch list. So I tend to see these trades anyway. But I gotta force myself to not take them because I could very easily be distracted, take a trade there when it wasn't supposed to be a good trade. So I'm actually gonna mark this pair here. I tend to mark these as some kind of color to not take any trade on those. So here we go. Now that looks like a good trade. Okay, that looks like a good trade like the second one. But again, we're on a pair here where our edge doesn't play out. Actually, at least for me. Like your edge could play out very well in this. You could be having really good results. But in terms of my own edge, it doesn't work out here. So look at how the price played on this. Again, a way to scare the beginners. But we get stopped out really quick over here. Okay, didn't take long. You put a stop loss above the high like I do. And we get stopped out. Now, of course, some people are going to say, well, you put your stop loss too close. Give it more space. Well, we have another way here. How do you know how big to put your stop loss? The reason why I put my stop loss beyond the high is I know if I go there, if price goes there, I'm going to be wrong. Now, I could put it here, sure, but that makes me having a much bigger reward to risk. So this is why I put it just beyond the high, and if I get stopped out, then I'm done. I'm not going to be in the market anymore because we have plenty of chances of that, and that's going to happen a lot on EURUSD. Hence why I don't trade that pair. You could still trade it if you want to. All the best if you trade that pair. You have good results. I'm happy for you very much. For me, it's not a pair that's conducive for my own trading, and I prefer to stay away from that pair. So see how this looks like a good move. You could say, oh, I'll just miss it and went into profit, but it doesn't matter. All these thoughts we have about, oh, price goes in my favor, I missed the trade, I just got stopped out and then price was in my favor after. Those are thoughts that are not conducive for trading. How you want to fix this? Like, tell me, if you're so afraid that price will hit your stop loss, go in your favor after, how do you want to fix it? Are you going to re-enter the market, put in some more risk? Are you going to move your stop loss further? Again, take some more risks and have a way that's going to be more dependent on your feeling than objectivity whenever you take a trade. There's many ways you can go about it, but I prefer to be much more systematic. I prefer to keep things very straightforward. And I don't care if price hits my stop loss goes back to profit after. To me, that's irrelevant. What's relevant is taking the right decision based on my plan, my strategy, and trading the right pairs that I should be trading, not the ones that are not conducive to my edge. So hope this was useful for you today. Hope this was of value, of course. Leave me your thoughts below in the comment section. Again, I'm not a fan of EURUSD. You might be a fan. That's totally cool. Let me know below in the comment section if you are a fan of this pair. If you took these trades, let me know in the comment section below as well. Because you might be following my same strategy. You might be following the same things I teach on YouTube here. Take the same trades or all the trades you see in the market without really kind of looking at what pairs work well, what pairs don't work well. And that's not good for your results, of course. Let me know in the comment section below. I can do more videos on this if you want. And make sure you are subscribed if it's not done yet. I publish videos like this 3 times a week. 1 interview every Sunday, 2 videos in a week to teach you stuff about trading, what I do in the market, my own things. And I'll catch you back here again in the next video pretty soon. Ciao.